So let me begin with the official hashtag joyant, the hashtag jubilant, the new hashtag bear market to all my tenderly roasted, plump, sweet little trading friends out there. Hope you're doing well. Hope you're surviving this. Today's video, I'm going to talk about the best sectors and the best stocks to trade during a recession, a depression, a crash, whatever you want to say. What do you trade? Where do you put your money? We're going to talk about that. But just before I get started, let me please remind you if you need help with your trading. I don't care if the market's going up. I don't care if it's going down. I don't care if it's chopping all around the merry-go-round. Make sure you go down in the description box and trade with the live community. Only 6 losing trades the entire year. I don't care what this thing does. Just do what you need to do. I'll do what I need to do. I shall guide you to the path of prosperous fortunes, or at least I will try my very best to do that. Now, also before I get started, let me just shoot some levels at you. Since yesterday, in the market mutterings, I was talking about some important things. So while I have the mic here and your attention for a brief moment, let's take a look at some other levels because, again, the market's selling off. Appears, unless something big happens from now until the next 20 minutes while I'm doing this, we're going to close below 4K. Now, you've got to go to the weekly here. I plotted out a couple of levels if you guys just want to jot them down if you haven't already. 20% correction here is going to be somewhere around 39.50. This looks like a foregone conclusion since right now we're trading at 39.90. I would imagine either today or early tomorrow we try to get down into that level. That might be a short-term temporary bounce zone. Remember, everything that we're looking at for bounces is just temporary, but just something as a marker. This was also a pretty good level. It takes us back to March of 2021. So we're digging into last year. 30%, this would take us back into September, October of 2020, erasing the entire year of 2021. That's going to be somewhere down around, let's say, the 3400s. I believe that we'll reach an exhaustion point or a yearly low somewhere between that 20 and 30% mark. That doesn't mean we're going to rally to all-time highs. We probably don't see that this year. Much different market, and we're really close to actually erasing all of 2021. So again, keep those levels there. The market is not done selling off, still trying to find some lows. Now let's talk about the video today where we're going to look at some sectors that you can trade or some stocks that you can trade through a recession. Now this is something unique for me because obviously the easy answer is just short. Just take your favorite stock and just short the thing. Now, I know a lot of the new meme stock traders, a lot of the new traders on board, like, I hate those dirty bastard short selling. They kill the market. Look how good short selling is now. Look at the money you could make now. You could have rode the stock all the way up and then all the way back down. I mean, you didn't even know to go everywhere. What other job do you want, man? How easy is this? But anyway, let me talk to you about something. If you're new to this, something will make it easier. Obviously shorting is the way to go, but we're going to talk about stuff to buy as well. Obviously shorting is the way to go. If you don't know how to short, learn it. If you want to learn how to do the charts, something easy with Thinkorswim, you can just put a subtraction sign in the ticker box, type in your stock, and it'll flip the chart for you. So you can look at it like you're used to looking at breakouts. So you can take this one here, subtraction AMD, look at all your favorite stocks. Like, look, this is like AMD is going to break out. This is what AMD looks like in reverse. So anyway, little bit of help. Most of you probably knew that, but some of you newer traders may not have. Now let's go back and talk about, okay, you're hell-bent on buying. Where do you put your money? Well, what normally survives in times like this are your consumer staples and your necessity businesses. So think about it this way if you're new to economics and finance or just trying to grab a hold of this whole trading cycle thing. When money is readily available by the Fed and it's cheap to borrow, what happens? Corporations can borrow and grow their companies. That's why the money and the risk goes into growth stocks, the Shopifys, the Squares, the Palantirs, all of those growth stocks. That's why they all went up so much, because cheap, easy, free money allows them to do stock buybacks, allows investors to get in, venture capitalists to get in, and allows them to raise financing to grow their businesses. With no money, those specialty stores, and of course consumers get more money, so they buy $100 yoga pants at Lululemon or something like that, Lululemon or whatever it's called, right? Deckers, they buy those Uggs for $150 or whatever they cost. But during times of recessions when money is tight, people aren't making as much, and commodity prices are going high, they don't have room for $700 bean bags like Lovesac. They only want the necessities, and that's why consumer staples do good. So let's talk about a couple of these. One are things like Dollar Tree, right? Dollar stores, DLTR. Look at the difference here. This is not a subtraction in front of it. Look how well it's holding up in this market. Dollar stores, I think there might be a couple more of these if you want to do your research. Procter and Gamble, PG. Look how strong this stock is holding up in this market correction. And another one here, General Mills, right? Cereal, other types of foods. Look, this is actually breaking out in this market. So there's three of them right there that are in that food business, or not, I wouldn't say Dollar Tree necessarily is, but cheap stores that people can use. Now, there's other ones there, Walmarts, Targets, those value stores tend to grow. So some of them are still selling off, but they're going to turn around. But these three look really nice right now for those that are looking to stay to the long side and do buying only. This also brings you to things like grocery stores, food like Kroger's, KR. Again, look how well this chart is holding up. You've got things like Costco, which I think is in a bit of a downtrend. But as we deepen this recession, you're probably going to see a pretty good turnaround. I don't particularly like this chart right now in this market. This one's not holding up as well. But then another one is this ACI, Albertsons. Again, holding up really well. These last couple were not as much as the previous ones, but they're pretty good. Healthcare stocks generally do well, like Molina, Tenet, Bristol Myers, Squibb. They can be touchy. And then also, we go to the next sector. The deeper the recession, we need to start looking at sin stocks. Right? Because I tell you what, as bad as it sounds, when people are broke, they like to smoke. And you have this Philip Morris here. Look at this. Philip Morris looking pretty good right here. So when we think about this, you can do some other research on your own. I'm going to give you a rundown quickly of the best charts I saw if you didn't jot them down. I'm sorry for talking really quickly. Dollar Tree, Procter Gamble, General Mills, Kroger's, Philip Morris. These are all solid stocks to own during recessionary times. There is a potential bounce there in Costco on oversold conditions, right? But they could be kind of moving from a value store to a more of a premium store, but nonetheless, there are adequate names here. The rule of thumb is as we deepen into a recession, it is healthcare stocks, consumer staples, drug stocks, for example. I wouldn't say when a drug stocks, I'm talking about medical marijuana. And of course, your sin stocks, alcohol, liquor, cigarettes. Those things will continue to thrive. And the deeper the recession, unfortunately, people will become really depressed and consume more alcohol, more junk food, and more cigarettes. Obviously, you can always go the short route, but whatever you do, I want you to remember and learn something here if you haven't, is how market cycles work. Remember, when there is free money available or cheap, easy to borrow money, there are industries that get firsthand benefit of that, right? That money gets injected into our economy and creates liquidity into the economy. The consumer has more money. They purchase more things. That's why specialty stores and growth stocks had done so well over the last couple of years. As those rallies expand, you start to see money moving into cheaper stocks, right? Speculative stocks, penny stocks. As those rally more and hold consistent rallies, that's a sign of over bullish times. Now, normally that signals the end. Now, when we say an end, that doesn't mean you're going to wake up tomorrow and the end is over. It's there. It's a process. So you go back and you look at these charts. We were talking about it, right? Let's go back and look at something like PayPal. This had started its sell-off all the way back in July. So there's a lot of these stocks, the growth stocks, the Shopifys, right? That's when the hedge funds were unwinding. July, October, November, in that area, starting to unwind those risky positions and move into other assets. That was your sign that things in the market were changing. Even though the market itself, the S&P, the NASDAQ, the Dow were rallying, this is what was happening. And that was the sign. Remember, I always told you, there's no secrets in the market. It's always leaving you a trail of breadcrumbs. So you have a couple of things you can do. For you short-term traders, you quicker traders, we haven't found the bottom yet in the market. There's still some shorts to be had. There's still some great shorts, AMD, Nvidia, Facebook, Apple, short the rips until that doesn't work for quick trades. But at some point, as we near the 20% marker, between that and 30, we're going to see a pretty big rally, I believe, in this market, just on the sheer fact of seeing one. Now, again, I'm not saying we're going back to the V-shaped rally, all-time high, COVID money coming back into this environment. It's not. So it's going to struggle to hold those rallies. Again, the Fed is pulling back its support of this market. That money was made available. That injected liquidity into our economy. It created a real estate bubble, an oil bubble, a commodity bubble, right? Natural gas bubbles, all this stuff flying off the handles, and the war doesn't help. Now that stuff's going to come back in. It's time for all of that to pull back in. It's just a general healthy part of the cycle. The thing you need to understand for all of you is embrace it. You will only get a couple of shots throughout each year to really take advantage of those corrections and position yourself for the turnaround. So I believe now we're ending the cycle there. There are some safety plays that I gave you, but still I feel that we're getting very close to some things that are going to be attractive. So make sure you subscribe to the channel, like the video, or continue to keep a dialogue with me or talk with me or come to these videos, and we'll discuss that when the time is right. It's not going to be tomorrow. It's going to be the next day, but there will be a rally, and we would want to look at those stocks again. But for now, money's tight around the world with the Fed pulling back, central banks pulling back, and that's what's going to happen. So in a brief review, learn to short. We've been talking about it all the time. If you don't learn it, even if you never use it, you need to understand what short sellers are thinking about. But I tell you what, I'm just going to be straight to the point. You're missing out, because look at this money. You could be shorting from 762 down to 357. I mean, there's tons of money to be made. Don't hate it. It's another tool in your toolkit. Those that come out here in this meme stock revolution and started banging this, saying these short stocks are evil, even Elon Musk saying that kind of bullshit. No, short selling is a way for the common person to make some good money in economical downturns. It's absolutely silly and stupid and ignorant and just bad business for you not to be able to put that in your toolkit and make money. I mean, you came here to make money. That's what you want to do. Don't turn your back on that. On the other hand, if you must, after I've given my whole pre-sure speech, go with the consumer staples. Go with the safety stocks if that's where you want to put your money. But now all of us need to be preparing for a potential turnaround between that 20 and 30% level and get ourselves ready, get our cash built up so we can go to work and make some big money. So anyway, guys, thanks for watching this video. I hope I didn't talk too fast. I'm really kind of hyped up. I've had like 19 cups of coffee. I've got the shakes. Yeah, I got the shakes, but whatever. If you want to trade with me, like I said, only 6 losing trades. We got a bunch of shorts that we're still collecting on right now in the part-time trader. Why you're not doing that, I don't know, but go down in the description box. Make sure you sign up. Make sure you join me live each day for trading. Look forward to seeing you there. Nonetheless, look forward to having all you guys around here for these videos. If you have anything you want to talk about, put it down in the description box. Until next time, trade well. I shall talk to you soon. Cheers.